大家好，欢迎锁定东西会。今天我们请到的是
Hello everyone, welcome to East West Horizon. Today we invite Dr. William Yu from UCLA Anderson Forecast Team to help us understand their newly published U.S.-China 2022 Annual Economic Report. Here are a lot of uncertainties. Let's welcome Dr. William Yu. Yes, thank you, Sylvia. Hello, everyone. Recently, we published our annual economic report. There are two major uncertainties in our economic trend. First is the high inflation rate. The second is the Ukraine crisis, which is invaded by Russia. The war will trigger the world economy uncertainty in the areas including natural resources, economy, and political turbulence, etc. Here's how we analyze all those information. Fed has announced to increase its benchmark federal funds rate by a quarter percentage point in battle the inflation. We expect Fed will keep increasing rate in the next few months. How much is the final rate? No one is sure. In the near future, there has both supply and demand factors. The increase rate could reduce the demand and tighten up the money circled in the consumer side. But supply problem is hard to solve. For example, the energy price is quite high and the car supply is low. These are not under control by Fed. Because of the Ukraine war, the oil and gas price could not reduce in short time. Food supply will experiencing great pressure at the same time. It will place impact on the inflation too. We noticed that in China, COVID infection increased rapidly. China's strict policy may have impact on world supply chain. It will increase the consumer price in the U.S. as well. So in the next 1 year, the inflation will hardly be defeated. The real estate market in the U.S. is pretty stable and steady. The demand is solid and the supply is not over the needs. The supply for residential property is really low. For example, in Pleasanton, there are 100 listings on the market pre-pandemic. Now the listings are only 1/4 of that number. Actually, every city is experiencing the similar situation. There is rumors that Fed will increase rate by 1%, but now it only increased 0.25%. Will the Fed actually worry that because of the war, if the rate increase is too much, the U.S. economy will be undermined too much? Yes, that is correct. Fed only increased 0.25%. If the war is under control, the inflation is too high, Fed may increase 0.5%. Yes, it is possible to increase 0.5% next time this year. If the pandemic and war are out of control, there is a possibility of increase 0.25% only. Is it possible that the house market cools down and the house price to slow down its increase? A lot of people cannot afford it anymore. Yes, you have a good point. We do not like the real estate market to go up too quickly and house price to increase dramatically. We hope that the real estate market could stabilize. One is because that fewer and fewer people could afford it. Secondly, faster growth will trigger bubble in the real estate market. No doubt that the Fed increasing interest rate is the stabilizer for the house market. Also, we do not want to see the real estate market crash down from the booming. Now, the 30-year rate is still in the lower level, about 3%. Even though there is a 1% increase of rate, it will not be bad at all. We believe the housing market will keep its stability until next year. People hope the house price to drop. This may not be true, right? It will not happen. Like what we discussed, the mainstream information will not support this prediction. Anderson forecast decreased China's GDP growth to 6.9% because the data measurement is different. Will 6.9% still be one of the highest GDP growth in the world or the highest in the world? Yes, that is correct. Even under the pandemic, China's growth rate is still positive since 2020. We use some direct data to measure Chinese economic growth rate for the past 2 years. But it may not be a good thing. In the past 1 year, we heard that Chinese housing market is experiencing some bad news, like ghost town. This has been a long-time rhetoric. A lot of critics from outside of China will have such claim, like 鄂尔多斯, the mining town. Even with these comments, the Chinese real estate market was keeping going up without crashing for the past so many years. We have been looking into the data about how much the real estate prorated in the whole GDP. For example, in the US, which is one of the biggest world economy body, in the past 6 to 7 centuries, the real estate market is only about 3 to 6% of the GDP, average in about 4.5%. If it goes up to 6%, it means that investment in real estate market is overheated. We will see the market goes down to 3% and the bubble bust in the real estate market. The reason is when the supply is more than the demand, the housing market needs some time to digest it. China is different. Its real estate market contributes 9 to 10% of the GDP growth, which is really high. In 2014 to 2015, this number was down about 0.5%. You may say, China is different from the US. China is urbanized a lot. A lot of houses is not for living, it is for investment. So I believe Chinese use real estate as an investment, as Bitcoin. If the investor did not get the return, the housing bubble will bust. If there is a 1 to 2% decrease in real estate market, the economy will suffer recession. If Chinese housing market decrease, it will reflect on its GDP growth on the same scale. So if the market will have no expectation to increase, it will crash, like Chinese Evergrande Group's case. All this crash means a great impact on one's economy. Thank you, Dr. William Yu, for being with us in East-West Horizon. I will see you next time.
再见。